In this video, we're going to talk about process costing. We'll talk a little bit about job costing, and we'll talk a little bit about the flow of costs in the process costing system. So just as a reminder, process costing is used by companies that produce extremely large numbers of identical units through a series of uniform production steps or processes. Because each item is identical, in theory, each unit should cost the same to make. In essence, process costing averages manufacturing costs across all units produced so that each identical unit bears the same cost. Examples of companies that can use process costing are paint manufacturers, food processors, and petroleum processors. Whereas process costing is used by companies that mass manufacture identical units, job costing, also called job order costing, is used by companies that produce unique, custom-ordered products or relatively small batches of different products. Each unique product or batch of units is considered a separate job. Different jobs can vary considerably in direct materials, direct labor, and manufacturing overhead costs, so job costing tracks these costs separately for each individual job. Examples of companies that could use job costing include aircraft manufacturers, custom home builders, high-end jewelers, accounting firms, law firms, and people working in trades like plumbers and electricians. Process costing averages cost across units because units are largely identical. Not all work is complete at the end of each period, which leads to work in process inventory. If a company has work in process inventory at the end of the period and they use process costing, they will need to make additional calculations for equivalent units of production and more items to cost their inventory. Process costing is like rolling a snowball into a snowman. The product, the snowball, keeps picking up costs or snow as it rolls through each production process. Thus, the cost assigned to the product, the snowball, keeps getting larger and larger as costs from each department are progressively added to it through the transfer of costs. Companies that use automated production processes typically use two cost categories: direct materials and conversion costs, which are direct labor and manufacturing overhead. They typically do not have direct labor because the process is largely automated. Okay, that's it for this one. This video was created and narrated by Dr. Wendy Tietz. Have a great day.